Ah, Smart Water, now in a sleek can.
This feels cool, literally.
Perfect for social gatherings and on the go.
Should I start wearing turtlenecks?
One sip at a time, friend. Smart Water cans, for those with a taste for taste. Get yours today.
This episode is brought to you by Tic Tac. Summer tastes like Tic Tac. Tantalize your taste buds this sunny season with citrus adventure and orange. 2 everyday flavors that bring summer in every. Tic Tac Citrus Adventure is a yummy, vibrant medley of lemon, lime, and mandarin. And Tic Tac Orange is the perfect mix of tangy and sweet. Visit us at Tic Tac USA on social to refresh your summer with Tic Tac.
The Roger Stone Show. Entertaining and informative on the Red Apple Podcast Network.
And we're back in the Roger Stone Show. Joining me now is Barry Habib. He is the Chief Executive Officer of MBS Highways. He is nationally recognized as probably the authority on the mortgage and housing market, but he's also a very keen economic analyst in his own right. He is the author of the Amazon best-selling book, Money in the Streets. Barry Habib is actually widely credited with saving the mortgage industry in 2020 from margin calls due to Federal Reserve actions. It was Barry's presentation to the Fed that created stability at a critical time, and we're pleased to have him. Barry, roughly a week ago, President Donald Trump posted this up on social media. He said, "I'm giving serious consideration to bringing Fannie Mae and Freddie Mac, the two country's two leading housing agencies, public. I'll be speaking with Treasury Secretary Scott Bessent, Secretary of Commerce Howard Lutnick, and the Director of the Federal Housing Finance Agency, William Pulte, among others, and will be making a decision in the very near future. Fannie Mae and Freddie Mac are doing very well, throwing off a lot of cash, and the time would seem to be right. Stay tuned." Now, you contacted immediately and told me, Barry, this is a great idea, but only if the president continues to guarantee the mortgages. Otherwise, it could have a deleterious effect on housing bond yields. Within minutes of your telling me that, the president then posted, "Our great mortgage agencies, Fannie Mae and Freddie Mac, provide a vital service to our nation by helping hardworking Americans reach the American dream, home ownership. I'm working on taking these amazing companies public, but I want to be clear, the U.S. government will keep its implicit guarantees, and I will stay strong in my position on oversight, seeing that as president. These agencies are now doing very well and will help to make us make America great again." Barry, your thoughts about why we should take Fannie Mae and Freddie Mac public, as the president seems to be indicating he plans to do?
Well, first of all, Roger, it is so great to be with you here. And, the shareholders of Fannie Mae and Freddie Mac would be very pleased to that, because since they've been in conservatorship, they've been kind of, locked out of things. So it would definitely be beneficial to the shareholders. But more importantly, I think that by taking Fannie Mae and Freddie Mac out of conservatorship and allowing them to participate in the free markets, that could be something that actually expands their role into the housing market and helps people to purchase homes and makes homes even more affordable. The other thing is that there is an option that Director Pulte talked about where they would still remain in conservatorship but go public. So that was an interesting one. I gave that a lot of thought, and I think that that could be something where it could be beneficial to the U.S., where the U.S., instead of getting the benefit of just the cash that's thrown off, which, as you correctly mentioned, is very significant, they kind of can pull the money out in buckets by taking the company public. They would then be able to sell off portions of it and have those portions that are sold off generate significant buckets of cash that could go towards things like reducing the debt and reducing the deficit, which then would actually help to bring interest rates down. Roger, one thing that people have to understand, and I know we're going to talk about some other things, and it's all tied together, is one thing that keeps interest rates higher is the amount of debt that the U.S. has. Figure just round numbers. We've got $7 trillion we spend. We bring in $5 trillion. So that's $2 trillion that we have that is a deficit. It's kind of like a family living above its means. The way the United States makes up that difference is we borrow it. And the way we borrow it is by selling treasuries. We do sell it to people here in the U.S. We sell it to corporations, insurance policies, and other countries as well. So that amount of selling of treasuries, the more that we have to sell, we have to entice people to buy those. And the way you entice them is with a higher rate. So if we had less to sell, we could actually reduce rates.
Yeah, let's listen to Bill Pulte talking about what he and the president and Secretary of Bessent may have planned.
This Biden inflation that we had the last 4 years, which created this housing crisis, now President Trump is coming in and fixing it, and he's turning around Fannie Mae and Freddie Mac. You know, Bill, I don't know if you know this, and most Americans don't know this, but there's $7.8 trillion in Fannie Mae and Freddie Mac that we, as the American taxpayers, have many rights to. $7.8 trillion. And until President Trump showed up on the scene, nobody even really knew that they were making this much money and that we had these as huge assets. So like one of my friends said recently, President Trump just finds money everywhere. And he found money at Fannie Mae and Freddie Mac, and we're going to use it for the benefit of the American people.
Okay, so Bill, I heard that same comment on another network from you yesterday. You said this is a business that could be worth trillions of dollars. Trillions to whom?
Trillions to the American people, trillions to the shareholders one day. I mean, you know, we got to clean up the capital structure, and that's potentially what the president is looking at. He will still be in control. It will still be a very, very prominent company for the government. However, we are really focused on driving operational improvements and really making these great American icons once again. And Bill, the American economy is very robust. And under President Trump's leadership, these two companies, I stand behind it, they're going to make over $30 billion a year in earnings. I think that number will eventually be over $50 billion. These are huge assets, Bill, and it's about time we have a president who actually knows that they are there.
Really big.
I think that sums up the possibilities, the great potential. But as you yourself have pointed out on this show, Barry, the key right now is a cut in interest rates by the Federal Reserve. And while Chairman Powell seems to imply that it's Donald Trump who's acting politically by calling for a rate cut, it seems to me that the inflation rate was virtually identical to what it is today the last time the Fed cut rates to try to benefit Joe Biden's reelection. So why not a rate cut now? Again, let's listen to Bill Pulte a second.
From where you sit, what is the most convincing argument for the Fed to cut rates at a time when the White House's tariffs threaten to reignite inflation?
Well, first and foremost, inflation's lower than it was the last time they cut. President Trump has been very successful at reducing inflation, and so therefore it just only makes sense that if inflation was higher and they did cuts then, why can't they do cuts now? But to your point, for the last 4 years, at least as it pertains to Fannie Mae and Freddie Mac, inflation has been totally out of control. Mortgage rates skyrocketed. And frankly, people are trapped in their homes with these low interest rates. We need to get interest rates down. And President Trump, I believe, deserves that because he's crushed this Biden inflation.
So, Barry, the president, the secretary of Treasury, the head of the Federal Housing Finance Agency have all called on Jerome Powell to cut rates. Tell us why the Fed should cut rates now.
Well, there's a lot to talk about, Roger. So let's try and unpack this step by step. And if it's okay with you, I just want to try and lay it out so all of the listeners could just try and understand where we are.
Barry, I'm going to lay back and let you talk, and then we'll go to break. When we come back, I'm going to let you talk some more.
Okay. The Fed can either be in one of three positions. One is called accommodative. That means what they're trying to do is keep interest rates low enough to spur borrowing, spur the economy, grow the economy. But the downside is that potentially could cause some inflation. Then there's neutral. That's like Goldilocks. They feel like things are just about right, so we're neutral. We're just going to hang right here. And the goal is to try and be at neutral. And then there is restrictive. Restrictive means that they literally are trying to slow the growth of the economy. And that can be detrimental because that's less tax receipts, that's less growth, that's less money that people are making. But the reason that they want to do this is because they're very concerned about inflation, and it's a very blunt instrument, but that's the tool that they use to tame inflation. Now, if inflation were a major issue, then certainly we'd have to be restrictive. But where we are right now is that the Federal Reserve is 1%, or you could say 100 basis points, that's what most economists would say, restrictive. So that means they are kind of like having their foot on the neck of the economy, intentionally trying to slow it down because they're fearful of inflation. Now, while we don't want inflation, we have to understand what's on the Fed's mind. Number one, the latest inflation rate that came out on a year-over-year basis is 2.5% by the Fed's favorite measure. That's slightly above their target of what they wanted, 2%. But there's a couple of things that we have to understand. That's a year-over-year number, Roger. If we look at the numbers that are coming in, for example, this last month, inflation was a meager 0.1%. If you take it out 2 decimal places, it's 0.12. That's less than 1.5% on an annualized basis. But when we analyze it further, here's what we come up with, and this is what's very interesting.
Barry, I'm going to ask you to hold that thought. We're going to take a quick commercial break, and we'll be back with economic guru Barry Habib explaining why it is essential that Federal Reserve Chairman Jerome Powell, who's not an economist but a lawyer, move to a interest rate cut now. Don't touch that dial. We'll be right back.
Now, it's time for Protecting Your Future, sponsored by Colonial Metals Group. Here's Roger Stone.
In these turbulent economic times, with the Federal Reserve refusing to cut interest rates and printing money like there's no tomorrow, with Congress refusing to codify the cuts in waste, fraud, and corruption identified by Elon Musk's Department of Government Efficiency, now is the time to protect your retirement. Now is the time to protect your future, and to do so with the strength of gold. Now is the time to acquire precious metals like gold and silver. You can convert all or part of your IRA, your 401k, or your cash savings tax-free by acquiring gold. The people I trust are the folks at the Colonial Metals Group. And you can reach them at colonialmetalsgroup.com/stone. colonialmetalsgroup.com/stone. Or if you have more questions, go to freegoldguide.com. Believe me, you'll be glad you did.
The Roger Stone Show on the Red Apple Podcast Network. This National Foster Care Month, Marine Toys for Tots is providing hope to children who need it most. Staff Sergeant James Caldwell, who grew up in foster care himself, shares that while handing out gifts at a Toys for Tots distribution event, a little girl looked up at him, reached into her bag, pulled out a stuffed animal and said, "Someone needs to make sure you get a toy too." That simple gesture embodies the heart of Marine Toys for Tots, ensuring every child, including those in foster care, experiences the kindness that can transform their future. Visit toysfortots.org today.
This episode is brought to you by Temptations Cat Treats. Your cat will come running for the perfectly irresistible Temptations Creamy Puree and Temptations Lickable Spoon Cat Treats. The best time to feed lickable cat treats to your cat is anytime. Feed by hand for a playful moment, in a bowl for a creamy treat, or as a topper to make mealtime fun. Visit TemptationsTreats.com to learn more.
The Roger Stone Show. Entertaining and informative on the Red Apple Podcast Network.
And we're back. We're talking to Barry Habib. He is the Chief Executive Officer of MBS Highway, but more importantly, he is probably the country's leading expert on the mortgage and housing markets, and as I say, an astute economic analyst in his own right. Barry, you were telling us about why you think it is essential that the Fed cut rates. Here's what you wrote. Jerome Powell says he doesn't have enough data. He always says that he's data dependent, but the data he's looking at is old and has significant lags. This is analogous to driving a car down the highway but looking in the rearview mirror. It's dangerous, and it's why we have these boom and bust cycles. Your words. Barry, pick it up from there.
So, yeah, we do. And speaking of the lags, the largest components in the Fed's inflation reports that they look at, 44% of the CPI report, the core CPI, and 19% of the core PC, these are the two things the Fed looks at, is shelter. The problem with shelter is that we are ill-equipped to look at these numbers as a government. We're using antiquated methodologies. It is such a big job, and it is, that the Bureau of Labor Statistics, the BLS, they divide the country into 6 pieces because they can't do it in one shot, which means they look at it every 6 months. That in and of itself causes a lag. But then they ask people, hey, what do you pay in rent? That's how shelter's measured, by rents and owner's equivalent rent. And they might reflect a rent that was dependent on a lease that they signed 6 months, 8 months, 10 months earlier. So the numbers that the Fed's looking at are a year old in many cases for the largest component. This is why the Fed was so complicit in creating 9.1% inflation, Roger, because we all knew that inflation was happening. We all knew, with all the money that was put out by Biden, with all the programs that were out there, we all knew the economy was ripping, and yet they kept interest rates at zero and kept pumping money into quantitative easing, and that fueled the flames of inflation to 9.1%. Think about how much money that cost us in things like cost of living adjustments, how much people are struggling and paying at the grocery store, how much you pay more for your mortgage or more for your car loans or credit cards. This is all at the hands of Jerome Powell, who you perfectly said is not a trained economist, but an attorney. Now, given all of these things, it is important that he understand, but I don't know if he has the capability to do so, that we are now in the opposite situation. We are looking at data that's old, that's reflective of things that were from a year ago, showing that inflation, even though it's not that high, is artificially high. If we use more real-time data, just like putting instant replay into football, coming to the modern age, if we use real-time data, inflation is right under 2% on the headline and just above 2% normally. So their obsession with this is not warranted. In addition to that, the Fed is worried about these tariffs. But if they would just understand that tariffs do not always get passed on to the consumer, oftentimes they are absorbed because pricing is elastic, Roger. Consumers make choices. Unless it's energy or gasoline or a specific drug, people can either cut back or make other choices to avoid that. And this is what Jerome Powell doesn't understand. Neither do the Fed. The Fed has become a bunch of lemmings. They are afraid of their own shadow because if somebody disagrees, they're ostracized. We talked about this before. In the UK, they just had a vote. 5-4, 4 against. That's real debate. That's really people opening their minds. Here, they all think the same. They're all a bunch of neo-Keynesians. And the problems that you run into is you don't have anyone with clear thought. Look, back in 2022, you had everybody begging for inflation. You had Powell, Mester, Kashkari. You had Daly, all screaming, we need more inflation. Well, they got it. They got everything they wanted because they were looking at old data, Roger. I think that the president is totally correct in asking for the Fed to cut rates. I think that Secretary Bessent and Director Pulte are 100% on target because housing is a big driver. And let me tell you something else. The job numbers, I know they came out solid, but there are some underlying weaknesses in the job picture that could really hurt us if the Fed does not act now, because it takes time for these Fed cuts to work through the economy. And if they don't act now, they're going to hurt employment and they're going to cause the job market to weaken, and that's less tax receipts and people on the unemployment line.
Unless, of course, that is their goal, because this is all politics. Look, the requirement for capital formation is consistency and certainty. Hopefully, with passage of the big, beautiful bill, tax policy will be set, and businesses and families will be able to plan accordingly. If the bill fails to pass, we will have a 68% federal tax increase across the board. Seems to me the Fed, with its too late strategy, is designed to bank on uncertainty. Banks make a ton of money selling derivatives to profit from uncertainty. The bank derivative sales essentially raise borrowing costs for private capital and to prolong high interest rates for every borrower, including the U.S. Treasury. The constant speculation here is a stall for action, if you ask me. It is essential that Jerome Powell cut the politics and cut the interest rates. As Bill Pulte said in that audio we played earlier, the last time the Fed cut rates, the interest rates, the inflation rate was about where it is now.
That is 100% true. but they were looking at things like the unemployment rate was beginning to rise, and that's what caught their eye. Now they're obsessed with inflation, and they're obsessed with the fear of tariffs. But tariffs could actually be deflationary, and they could slow economic activity. The Fed, once again, is misguided in this, and they need to take a step back. Look, what would be the harm in saying we're 100 basis points or 1% restrictive? It takes a long time for this Fed action. What they should be doing now is saying, look, let's hedge our bets here. We will still be restrictive. We could hedge against inflation, but let's cut at least 0.5% here and kind of minimize the potential damage that they're causing. But yet they're not doing it. And it is, I don't know if just Powell, we got one more year, Powell, one more year. And then we'll get somebody in like a Kevin Morris who will be fantastic as a Fed chair.
All right, I'm afraid we have to leave it there. I want to thank Barry Habib, economic guru extraordinaire, for telling us why President Donald Trump is absolutely right. It's time to cut the interest rate now. Whatever you do, don't go away, because we'll be right back with Alex Jones of The Alex Jones Show. And we've got a lot to talk about, including defeating the New World Order. Whatever you do, don't touch that dial.
The Roger Stone Show on the Red Apple Podcast Network.
Hello, folks. Larry Kudlow here. Pay attention, because China is leading the largest anti-American alliance since World War II, one that's already dumped U.S. bonds, grabbed 43 million acres of our farmland, and is plotting to dethrone the dollar. That's why IRA and 401k savers are protecting their savings with gold. Please go to freegoldguide.com/Kudlow or just call 800-621-3908 for your free gold guide on how to protect your wealth with gold 100% tax-free.